At Senior Wellness Hub, we believe that staying informed about everyday financial matters is an important part of maintaining peace of mind and overall well-being in retirement. Today, I want to talk with you about something that affects many seniors and families: how banks handle cash withdrawals and the reporting rules that come with larger transactions. These rules are designed to help prevent illegal activity, but they can sometimes create unexpected questions for honest people who are simply managing their own money. Understanding them can help you make smoother choices and avoid unnecessary stress, especially during retirement years when we want everything to feel stable, predictable, and under control so we can focus on enjoying life rather than worrying about paperwork or surprises. Many of us in our later years prefer having some cash on hand for home repairs, helping family members, medical needs, prescription costs, or paying for services where electronic payments are not always accepted right away. A retired engineer we heard about needed around $9,000 to pay a contractor for updating his kitchen. He made several ATM withdrawals over the course of a week. Later, the bank took a closer look at the account activity. Everything turned out to be completely legitimate, but the review process caused some temporary delays with automatic payments and required extra paperwork. Stories like this remind us why it is helpful to know how the system works so we can plan ahead and protect the financial stability we have worked so hard to build over decades of careful saving and responsible living. Let's take a moment to understand the main rules that banks follow in 2026. These come from laws that have been in place for many years, with some updates to address modern challenges. The Bank Secrecy Act requires financial institutions to report certain cash transactions to FinCEN, the Financial Crimes Enforcement Network. This system helps government agencies monitor for potential issues like money laundering or other financial crimes. For everyday account holders like us, the important thing is knowing what might trigger these reports so we can keep our banking simple, transparent, and worry-free as we enjoy our retirement years to the fullest. The first major rule involves currency transaction reports, often called CTRs. If cash deposits, withdrawals, or other cash transactions from the same person add up to more than $10,000 in a single business day, the bank must file a report automatically. This includes your name, address, identification details, and the amount. The report goes to FinCEN and can be accessed by various law enforcement agencies if needed. The bank does not need your permission to file it, and they usually will not notify you directly. This rule has been around since 1970 and applies equally to everyone: citizens, permanent residents, and others. Next are suspicious activity reports, known as SARs. Banks file these when they notice patterns or behaviors that seem unusual for that particular account. It could be repeated cash withdrawals that add up close to reporting limits, sudden changes in activity, large cash movements that don't match your normal habits, or anything that stands out from your regular routine. There isn't always a fixed dollar amount that triggers it. Even smaller transactions can lead to a report if the bank's monitoring system flags the overall behavior. Importantly, banks are prohibited by law from telling you that a SAR has been filed. This secrecy protects the effectiveness of the monitoring process. Another important rule concerns monetary instruments. When you use cash to buy things like money orders, cashier's checks, or traveler's checks in amounts between $3,000 and $10,000, the bank or business must record your full identification information. These records are kept for 5 years and can be requested by authorities. This creates a clear paper trail for larger cash movements and helps everyone stay compliant with the rules that are there to protect the financial system as a whole. In certain parts of the country, especially near the southern border, there are additional temporary rules called geographic targeting orders. As of 2026, FinCEN has these orders in place for selected counties and zip codes in Arizona, California, New Mexico, and Texas. In those specific areas, money service businesses such as check cashing stores must report cash transactions of $1,000 or more. This lower threshold is meant to address particular regional concerns, but it applies to everyone using those services. If you live in or frequently travel through those regions, it is wise to be extra mindful when handling cash at non-bank locations. Planning your transactions through your regular bank branch can often make things simpler and reduce any extra steps in these situations. Many seniors who travel to visit family in these states find it helpful to prepare in advance by using their primary bank accounts more actively and discussing options with their local branch before traveling. Now, why do patterns matter so much? Banks use sophisticated monitoring software that looks at activity over days or weeks, not just one transaction at a time. Multiple cash withdrawals that together approach $10,000 or that show increasing frequency in a short period can sometimes raise questions inside the bank's compliance department. This does not mean you did anything wrong at all. It simply means the system is designed to notice anything that looks different from your usual habits. For seniors living on fixed incomes from Social Security, pensions, or retirement savings, sudden large cash needs for home repairs, new medical equipment, vehicle maintenance, family support, weddings, funerals, or even special occasions like anniversary celebrations or holiday gifts for grandchildren can sometimes create these patterns unintentionally if we are not thoughtful about how we handle them. It is also important to understand the concept of structuring. This is when someone deliberately breaks up a large amount of money into smaller transactions specifically to avoid the reporting requirements. Structuring is against the law and can lead to serious consequences. The government does not always have to prove that you knew every exact rule. They look at whether the pattern suggests an intent to stay under the thresholds. This is why the safest and smartest approach is usually to handle large needs in a straightforward way, rather than spreading them out artificially. Being transparent protects your time, your money, and your peace of mind, allowing you to focus on what truly matters in retirement: health, family, hobbies, travel, and enjoying daily life without added stress. For many seniors, these rules become more relevant because we often deal with contractors for home modifications that support independent living. Things like accessible bathrooms, kitchen updates, ramps, grab bars, improved lighting, non-slip flooring, or even smart home devices that make daily life safer and more comfortable as we age gracefully. Paying in cash sometimes feels simpler, especially if the service provider offers a discount for immediate payment. However, using traceable methods like bank transfers, Zelle, personal checks, or even credit cards with good rewards can provide better protection, stronger documentation, and fewer complications if any questions ever arise later. Plus, these records make tax preparation much easier each year and give you a clear picture of where your hard-earned money is going, which helps when planning for future healthcare costs, long-term care needs, or leaving a legacy for your loved ones. Let me share some practical context that many families face in retirement. Suppose you need cash for a home renovation project that will help you age in place comfortably for many more years. Instead of making several smaller ATM withdrawals over a week, taking out the full amount you need in one or two planned transactions, supported by proper contracts and invoices, can reduce the chance of triggering extra reviews. One clear transaction is usually much easier to explain with good paperwork than multiple smaller ones spread across days. This approach also gives you better negotiating power with contractors because everything is documented professionally and shows you are organized and responsible. Beyond the basic reporting rules, it is helpful to know how data from these reports can sometimes be shared across agencies. There have been agreements between the IRS and other departments that allow certain financial information to be reviewed in specific enforcement contexts. While courts have stepped in at times to limit or review these practices, the reality is that financial records can occasionally connect to broader inquiries. This is one reason why maintaining clear documentation of all your legitimate expenses becomes especially valuable as we get older and want to protect our family's long-term security and legacy for children and grandchildren. Civil asset forfeiture is another area worth understanding in a calm way. In some situations, authorities can move to seize funds or property if they believe there may be a connection to illegal activity. The legal process works against the assets themselves rather than immediately charging the person. These cases can take many months and involve significant legal costs, which is why having strong records of where your money came from and what it was used for can make a tremendous difference. Many cases involve people who were simply running small businesses or making normal cash transactions for everyday needs, but the process itself can create temporary hardship while it is being resolved. Good planning and documentation help minimize these risks and keep your retirement on track without disruption. For seniors, the real impact often goes beyond dollars and cents. A temporary account hold can mean delayed mortgage or rent payments, missed insurance premiums, difficulty buying groceries, medications, or even simple household items that support daily comfort. That is why planning ahead and choosing electronic options whenever possible supports not just financial health, but overall wellness. Better sleep at night, less anxiety, more energy for morning walks, hobbies, family visits, gardening, volunteering, or community activities that keep us vibrant and connected in retirement. Financial peace contributes directly to physical and mental health, which is why we talk about these topics regularly at Senior Wellness Hub. Here is a practical 5-step approach you can start using right away to manage larger cash needs more smoothly while staying within the rules and protecting your well-being. First, avoid creating patterns when possible. If you need a significant amount for a legitimate purpose, like paying a licensed contractor, consider withdrawing or handling the full sum in a single transaction or as few as reasonably needed. This transparency helps the bank's systems see the activity as straightforward. Always pair it with proper invoices, signed contracts, business license copies, and photos of the work if appropriate, so everything is clearly documented and easy to explain. Second, shift toward electronic and traceable payments for larger amounts. Bank transfers, Zelle, personal checks, or wire transfers to verified businesses usually create fewer automatic cash reports. For example, paying a contractor $15,000 through a bank transfer leaves a clear digital record that the money went exactly where it was intended. This method supports good financial habits, simplifies tax reporting, and gives you peace of mind. Many seniors find that setting up automatic bill pay, direct deposit, and online banking simplifies monthly finances dramatically and reduces the need to handle large amounts of cash, which also lowers physical safety risks when carrying money. Third, be aware of your geographic situation. If you live in or regularly visit the areas covered by the current geographic targeting orders, try to handle your banking through established banks rather than check cashing services for larger amounts. Opening or maintaining a standard checking account, using direct deposit for Social Security or pension payments, and building a good relationship with your local bank branch can provide more stability and fewer surprises. Talk to your banker about services designed specifically for seniors. Many banks offer helpful tools, lower fees, dedicated support, and even workshops on safe banking practices. Fourth, build strong documentation habits now. Before any significant cash withdrawal, save the contractor's written estimate, signed agreement, business license information, and any photos or notes about the purpose. Keep these records in a dedicated folder, a fireproof box, or a secure digital file on your computer or phone that is easy for you or a trusted family member to find. Consider organizing everything by month or by project so you can quickly locate what you need. Should any question ever come up months or even years later, being able to quickly show exactly why you needed the cash and where it went can resolve matters much faster and with far less stress. This simple habit has helped countless families protect their savings and retirement security over time. Fifth, know and calmly exercise your rights. If you ever receive unexpected contact from bank compliance staff or government agents asking questions or presenting documents to sign, it is perfectly appropriate to politely say that you would like to speak with your attorney first. You are not required to answer detailed questions or sign anything immediately. Having a trusted immigration, elder law, or financial attorney you can call provides valuable protection and peace of mind. Many seniors work with professionals who understand both banking rules and the unique needs of retirement, including health-related expenses and estate planning. There are 5 key numbers worth remembering as general guidelines to guide your decisions wisely. The $10,000 level is the standard threshold for automatic currency transaction reports on cash activity in one business day. The $5,000 range is often where banks start paying closer attention for possible suspicious activity reviews, although patterns can matter at any level. The $3,000 mark applies to cash purchases of money orders and similar instruments where identity recording is required. The $1,000 threshold applies at money service businesses in the specially designated geographic areas. And zero means that when structuring or other concerns are suspected, there is effectively no lower limit for a bank to file a report based on observed patterns. Using these numbers as reference points can help you make thoughtful decisions rather than reacting in the moment when pressure arises. For seniors especially, integrating these habits supports long-term wellness in many ways. When your finances run smoothly, you experience less worry, better sleep at night, improved relationships with family, and more confidence in your daily life. Many retirees are now combining smart financial planning with wellness practices, tracking expenses in simple journals, reviewing bank statements monthly in a relaxed way, perhaps with a cup of tea or coffee, and discussing money matters openly with adult children, so everyone understands the family's situation and can support one another through life's changes, whether it's helping with medical bills or planning family vacations. Consider how these choices affect your daily life and independence. Using direct deposit means your Social Security or pension arrives reliably without extra trips to the bank. Paying contractors electronically creates digital records that are easy to reference during tax season or if you ever need to show proof of payment for insurance or warranty purposes. Avoiding frequent large cash handling also reduces physical risks of carrying money and potential memory concerns about tracking where cash was spent. All of these small, consistent decisions add up to greater security, freedom, and ability to enjoy your golden years fully without unnecessary complications. It is also valuable to talk with your family about these topics. Adult children often appreciate learning alongside their parents so they can provide support if questions ever arise. Some families set up regular discussions with a trusted financial advisor or elder law attorney who understands senior needs. This collaborative approach strengthens family bonds, ensures everyone is prepared for the future, helps pass on good financial habits to the next generation, and creates a safety net that benefits the whole family for years to come. Remember that banking rules continue to evolve with technology and changing economic conditions. What we discussed today reflects the general situation in 2026, but it is always wise to check with your own bank or a qualified professional for the most current details that apply to your personal situation. Every person's circumstances are unique. Your location, the types of accounts you have, your immigration status if applicable, your regular spending patterns, health needs, family responsibilities, and even travel plans all play a role in the best approach for you. At Senior Wellness Hub, our goal is to share practical, reliable information that helps you live with greater confidence, tranquility, and independence. Taking time to understand financial systems is one important way we protect the retirement we have earned through years of hard work. Small, consistent habits, documenting transactions carefully, preferring electronic payments when suitable, maintaining good records, using direct deposit, and knowing when to seek professional guidance can prevent many common difficulties and support a healthier, happier retirement filled with the activities and people you love. If you have experienced a bank review in the past or have questions about handling a home project payment, feel free to share your thoughts respectfully in the comments. Our community often learns from each other's experiences in a supportive way. Consider talking with a licensed attorney or financial advisor who knows your full background before making any major changes to how you handle large payments. This presentation is strictly for educational and informational purposes. It does not constitute legal, financial, tax, or immigration advice. Banking regulations, enforcement practices, and reporting requirements can be complex and do change over time. Please consult qualified professionals, such as an elder law attorney, certified financial planner, or tax advisor, who can provide guidance tailored to your individual circumstances, location, and needs. Thank you for spending this time with us at Senior Wellness Hub. Taking proactive steps to understand these practical matters today helps create a more secure, peaceful, and enjoyable tomorrow for you and your loved ones. Protect your financial well-being the same way you protect your physical health, with knowledge, good daily habits, regular checkups with professionals, and a supportive community around you. We appreciate you being part of our Senior Wellness Hub family, wishing you continued health, financial stability, joy with family, and true peace of mind in every season of life. We'll see you in the next video where we explore more topics that support senior wellness, independence, and graceful aging.